Did you know that in a single day, over $7 trillion moves across global currency markets? This staggering sum is more than the annual economic output of most nations. It flows silently, a vast digital river connecting banks, companies, governments. This movement isn't random, it responds to a hidden language of signals. These signals steer the price of your morning coffee, the interest rate on your mortgage, and the security of your job. Most people only see the headlines: a stock market crash, a sudden spike in fuel prices, or an unexpected election result. These events feel abrupt and chaotic, but they're often the final loud words in a long, quiet conversation. Behind every major economic event is a web of smaller, interconnected clues. Think of it as a silent language, spoken not in words, but in data points, policy shifts, human behavior. Learning to understand this language is like gaining a new sense. It helps you anticipate what might come next. This essay is your guide to that language. The silent language of global economics is the constant, subtle flow of information that precedes major headlines. It is the collection of small actions and data points that, together, paint a detailed picture of our economic health. Imagine a doctor monitoring a patient's vital signs. One reading may not mean much alone, but combined, heart rate, blood pressure, temperature, breathing, a clear diagnosis emerges. The silent language works in the same way. The sum of economic vital signs shows where we are and where we might be heading. Signals come from countless sources: a central bank hinting at a rate change, fewer container ships ordered, a rise in Dr. Copper, shifts in consumer confidence. Each signal is a whisper. Alone, it can be easily missed. But together, the whispers form a clear, compelling story. The news is often a lagging indicator. The quake after the ground has shaken. The silent language offers leading indicators: the tremor before the quake. By watching early warnings, governments adjust policy, companies adapt, and you can protect your finances. At the center are the world's central banks. Think of them as the heart of the global economy, pumping money and credit. Their most powerful tool is the interest rate. One number influences every loan, from small business and corporate bonds to your credit card. When rates rise, borrowing costs climb. Investment slows, big purchases pause. The goal: cool demand to fight inflation. But higher rates can slow growth, reduce profits, and weigh on stocks. A delicate balance prioritizing price stability. When rates fall, cheaper credit stimulates spending and hiring, a signal to support growth during slowdowns. Words matter as much as actions. A single adjective can move markets. Traders parse every line for clues about future policy. These verbal signals are core to the silent language, revealing the mindset of those who control the flow of money. When policy favors growth, investors often react positively, anticipating stronger profits and a healthier economy. Commodities are the building blocks of the global economy, grown, mined, and extracted. Oil, natural gas, copper, wheat, gold. Commodity prices tell the now. An oil spike signals supply disruption or surging demand. That signal travels instantly. Oil is the lifeblood of transport and industry. When oil rises, shipping, making, even growing food gets more expensive. Watching Brent and WTI is like taking the temperature of global commerce. Metals like copper and iron or signal building and manufacturing. A rising copper price often means expansion, hence Dr. Copper. Food staples track climate and geopolitics. Droughts, floods, or blocked ports can push prices up, with social and political consequences. Spikes in food prices strain households and can trigger unrest. These staples are fundamental signals of societal well-being and stability. Currencies are a nation's report card. The exchange rate is a powerful signal of economic health and stability. Every day, participants buy and sell currencies based on confidence. Strength signals faith. Weakness signals concern. A strengthening currency can reflect a strong economy, higher interest rates, or stability. If the Fed raises faster than others, the dollar can appreciate, making imports cheaper and helping tame inflation, but pressuring exporters. A weakening currency can flag slowdown, low rates, political risk, or heavy debt, raising import costs and fueling inflation. Uncontrolled drops risk crisis. Watch the majors: USD, EUR, JPY, GBP. In fear, the dollar often acts as a safe haven. FX movements tell a real-time story of shifting power and risk appetite, a silent vote cast by millions every minute. Global economics is intertwined with politics, power, and international relations. Tariffs send clear signals: higher costs for consumers and businesses, disrupted supply chains, and inflation pressures. Beyond tariffs, tech restrictions, especially on advanced chips, reflect national security aims and reshape global production. Companies rethink footprints, relocate plants, redesign networks, expensive shifts that raise uncertainty. Regional alliances create alternative trade and finance networks, slowly shifting global economic power. Watching who partners and who parts reveals future centers of growth and influence. Climate policy is now economic policy. The transition creates new industries and risks. Storms, droughts, wildfires, and damaged infrastructure carry a huge price, a critical signal of long-term risks and opportunities. Ultimately, economies are made of people. Two potent forces drive markets: fear and greed. Greed fuels optimism and piling into assets, pushing prices to unsustainable heights. Fear spreads fast. Panic selling can drive markets far below fundamentals. Investor sentiment shows markets are social arenas where psychology matters as much as math. Beyond emotion, demographics are slow tides. Young, growing populations signal larger workforces and long-term demand. Aging and low births mean fewer workers supporting retirees, straining pensions and health systems, often slowing growth. Migration reshapes labor markets. Immigrants fill gaps, start firms, and drive innovation, yet can spark tensions. Watch who attracts talent and who loses it. These human factors are essential parts of the silent language. A powerful new voice joins the silent language: artificial intelligence. AI and automation aren't just another advance. They're rewriting work, productivity, and wealth creation. AI can automate routine tasks, find efficiencies in vast data, and speed scientific breakthroughs, lifting growth and living standards. But disruption looms for routine cognitive and manual roles, raising urgent questions about the future of work. A widening split may emerge: high demand for those who create, manage, and collaborate with AI. Stagnation where tasks are easily automated. Nations investing in research, education, and infrastructure gain advantage. AI strategy, data policy, funding, and ethics are new geopolitical signals. Mind the gap between AI haves and have-nots. Continuous learning is essential. Build skills that are hard to automate: critical thinking, creativity, emotional intelligence, complex problem-solving, leadership. Understanding the silent language is a practical skill for an uncertain world. You don't need to be an expert to start. Cultivate curiosity. If inflation is rising, check commodity and shipping costs. If markets are volatile, read the latest central bank statements. Start connecting the dots across sources like Bloomberg, The Economist, and the Financial Times. Think in scenarios, not certainties. Stress test your finances. What if rates keep rising? What if an energy shock hits? Build an emergency fund. Diversify income and investments. Don't put all your eggs in one basket. Develop durable human skills. Communicate, collaborate, create, and stay current with AI in your field. Join the conversation. Start today. Pick one signal: copper, inflation, or a demographic trend, and follow it for a few weeks. The whispers will become clear.